So I ran across the planet. I ran across this on Facebook or the internet, and Planet 13 is entering the Florida market by acquiring a Florida MJ license. This MJ license, they have to pay $55 million in cash, not stock, in cash. So, and then on top of that, this is just a license so they can operate in Florida, so they can start building stores, building a cultivation facility, and that is going to be, it's going to cost money. Planet 13, if we look on the balance sheet, look at the balance sheet. They currently had $79 million of cash. So with $55 million gone, they would have about, 12, 13 million, $50 million. So what is Planet 13 going to have to do? They are going to have to raise capital in order for them to build their stores, for them to build their cultivation facility. So that what they're going to have to access the capital markets for more money, or borrow money, or figure a way to get more money in order for them to build their dispensaries and to build their facilities so they can start operating in the state of Florida. At least that's my opinion. I mean, if this license that they acquired already had some, had a facility and some retail locations, I think they would have to pay way more than $55 million of cash to acquire this license. But I think it's just a license. I could be wrong. This is if you know better, if you done your research, if you emailed the company and you figured it out, and you're like, oh no, it's not just a license. They have some stores, they have a cultivation facility. Then comment down below. Let me know. I'm wrong. I'm an idiot, and this is more than just a license. I could be wrong, but I don't think I'm wrong. I think it is just a license. But again, I could be wrong. So whatever they're gonna do, they're gonna have to access the capital markets. They're gonna raise money. They're gonna dilute shareholders. It's just the way things are working right now for Planet 13. Ianthus Capital already has an established facility. They already have a license in Florida. They already have a growing facilities. They have 17 dispensaries, and they're valued at 77 million Canadian dollars. And in the US side, they are valued at $61 million. So essentially, by buying Ianthus, you are basically, buying the license. I think Ianthus, Florida, and Florida license and the operating facilities and 17 dispensaries are way more valuable than what the company's market cap is right now. And the fact that the company is profitable is just another cherry on top. There's a lot of companies out there that would want to acquire Ianthus Capital. So I don't know at the end of the day what the market is going to do with Ianthus Capital. But as a retail investor, as a person that invests in the market, all I can do is try to buy as low as possible, gamble that nothing bad will happen with the company, and over time big money will pump this thing to the moon. That is my gamble as a retail investor. I don't think I don't think retail investors move stocks. Seriously, I think it's maybe retail investors, but big money ultimately moves the stock at the end of the day. That's my belief. I could be wrong. It could be retail investors that are responsible for the pumps of all stocks, but I don't know. I still don't believe it. That's just my opinion. But hey, anyways, Ianthus is I think it's really cheap. Fully diluted, it might be a little bit more because they they do have warrant. I don't know if they have warrants anymore. I don't know. I haven't really kept up to date with their warrants and options, which could dilute the stock a little more. But still, you know, I still think Ianthus is extremely cheap. And if it goes back down to like 21 cents, 30 cents, I think that's like a huge buying opportunity. But hey, we'll see what happens. We'll see what the market does, where the market pushes Ianthus Capital stock. Anyways, that is it for the video. Yeah, well, actually, I kind of wanted to make a full, right now, today is a holiday, so the market was closed. Pre-markets doesn't even show in pre-markets right now. It should have shown. It feels like it was the same, but maybe the pre-market is open right now. I could be wrong. I don't know at the end of the day. For just like Men, I feel like companies like Sundial or Aurora or maybe even Tilray could even try to attempt to acquire both Men and Ianthus, at least the debt structure. Give them more options to either acquire either one of the companies, either Men or Ianthus. Because they're both cheap, right? And they both struggling. So hey, Tilray can move in and buy the Ianthus debt, or Sundial, or for any of the Canadian MJ company. Because let's be honest, they need to get into the U.S. market, and the best way is acquisition. Because you're not going to be like, United States become fully legal, let's go, and start building our growing facilities and our dispensaries and buying up the licenses. It just sounds like too much time. It's too time consuming and too much work, because building a facility takes years, like at least a year to build. And dispensaries take months and months of construction before they're operational. So it just sounds way too much work to build all that infrastructure just to get into the US market. It's just so much easier just to acquire an established company and operate in the US and just expand on the current operations of the acquired company. I think that's just so much easier than going in and doing everything from scratch. But that's my opinion. Anyways, thanks for watching. Don't forget to sub, like, or dislike, or whatever you like to do. And have a great day. Bye.